Hi everyone, welcome to the Buffett and Beyond Research Saturday ETF report, and this is November 2nd, 2024. Remember folks, if you want to live on the beach like Jimmy Buffett once did, you've got to invest even better than Warren Buffett does now. And first of all, let's look at the QQQs, which is the NASDAQ 100, and let's see what it is doing, because Thursday, very, very nasty fall. It started on Wednesday, as you can see over here. So Wednesday it started, and then all of a sudden it dropped like a rock with the rest of the market. I'm not blaming the QQQs for anything. The whole market dropped, and we fell below the 20-day moving average and are bouncing off the 50-day moving average. Not that we actually hit it, but today is a better day, or I should say yesterday, while I'm recording this Friday afternoon, we have a better day, and now we're going up to test this 20-day moving average in here. And we're going to see if it can get past that. Let us look at the Dow Jones, which we haven't looked at in this ETF letter at all, and we see the same thing. We see that it fell down below that 50-day moving average here. It had been below the 20-day moving average and played around there for quite a while, then fell below the 50-day moving average, and on Friday is above it. And again, this is before the close of the market, and it's sitting between the 50-day and the 20-day moving average. So we'll see if it can get through that 20-day moving average. We actually, as of this moment, have a buy signal in here. If this market closes up, and I'm talking about the Dow, this is a divergence. You see this line here going up, the market making a lower low in here, but the indicator making a higher low up here. That gives us pause to say that we might, as long as this market can close up today, we might be getting a buy signal in here. When we come all the way down here, we can see that we have been in a downtrend over the past couple of weeks, and could this be starting to turn this? And could we be starting to turn this black line in here? And of course, you're looking at that and trying to say, well, yeah, I think it's going to turn up, but it's got to turn up for real, and it's got to come back up across this red line in here in order to give a buy signal. But very, very short term, if the market closes up today, it looks like we have a bullish divergence on the short term. Down here, this is an intermediate term. So we'll see where we are, folks, if we can get above this 20-day moving average. And it all depends on the election. The problem is that nobody can say for sure or even guess that no matter who wins the election or whoever wins the election, that the market is going to go up. So we'll just have to wait and see. And, of course, the election is on Tuesday. Now let's go to the XOP, which is the Spider S&P oil and gas exploration production, and we can see we have just been on a downward trend in here. We are below the 50-day, which is the blue line, the 20-day, which is the green line. The problem is the green line is now turning down below that blue line, and that's called a bearish cross right there, folks, and we'll see where it closes today. But oil has been in a downtrend now. This is the 200-day moving average up here, and this XOP can just not stay above it. In fact, it's below all its moving averages right now. So that means XOP is on the way down. And down here you can see is starting to get oversold. So that means maybe we'll get a turnaround in here someplace. But it's been down here before, folks, over here and over here. So if we draw this line right across here, you could see why we are pausing at this line right in here. So the key is it going to fall below it? Now, when we look at energy, well, energy just started to turn up, and usually the XOP, oil and gas, and the XLE, which is the energy, really follow one another. But here we're getting a little hope. The XLE, the energy, turned up, so maybe that's going to bring the oil back up. But the energy turned up. It's above its 200-day moving average, 50-day moving average, and 20-day moving average, all in a row, all in one day, folks. So that's a pretty nice move, and we'll see where it closes at the end of the day that I'm recording this, which is Friday afternoon. Now, let's look at the technology, and the technology isn't telling us anything, but it is trying to bounce off its 50-day moving average right in here. We'll see what happens. And when we come to the semiconductor, we are looking at the same thing, trying to stay above its 50-day moving average, and of course, the red line is the 200-day moving average. So we're kind of at an important point for these two folks in here, but it's the indices that we're looking at. And let's look at transportation. Transportation just like the Dow Industrials, just might be giving us a little short-term buy signal in here. You can see the lower low in here, and then because it's this little nub that tells us to close, this little nub right in here pointing off to the right, that's the close. So when we draw the closing, we get a lower low here, but this indicator very short term, remember that, very short term, giving us a higher low up here as long as this closes up today, and it looks like it's going to. And I'm talking on Friday. So we have this indicator pointing down here, and maybe, just maybe, it's starting to turn up. Now remember, when we look at the Dow Jones, the transports have to move in the same direction as the Dow, because it's the transports that take the raw materials to the manufacturers, and the manufacturers use the transports to get their finished product out to the retailers or the warehouses, wherever we buy from, and then we have to go and pick it up, or they get delivered to us. So the transports are very, very important to show us the way of the economy. But if you look at this whole move in here, the whole move has generally been up. We're going from the lower left to the upper right. So maybe we're getting that little move to the upside in here. Maybe this will become a buy signal. And no matter who wins the election, they think the economy is going to do pretty good. You know, as Warren Buffett always says, he lived under 6 Republican presidents and 6 Democratic presidents, and he made money every one of those years, under every one of those presidents, I should say. So it's not so much who's president, it's how much Congress does not mess with the economy and make more rules and regulations. That's the whole key there, folks. And I just want to show you a stock, Amazon, in here, which came out with good earnings and good revenues, and all of a sudden it has turned up. And you can see, let's look down here first. We can see that it was just kind of trending down and doing nothing, and now has turned up. And yeah, we are testing the old highs in here of a couple of months ago, so about 3 months ago. So we'll see what this stock does on Monday and Tuesday, if it can break through that. And of course, Tuesday will be an event that moves the market. It'll move it up, it'll move it down, but it'll move the market one way or the other. And then after a couple of days, the market will settle down and say, okay, here we are, same old stuff. Everything is the same going on, more or less, relative to the economy. And we'll look at the numbers, and we hope that the Federal Reserve continues to lower interest rates. So here are the sector stars, and these are the top 18 stocks in our sector star portfolio, and it's up. We come down here, it's up 30%, down from 34.9% last week. So it took a hit on Thursday, but the thing is that it's still about 50% more than the S&P 500. So that's a good portfolio, folks. And this is what it was from last week, almost 35%. Now it's 30%. So it lost a nice little chunk in there, but so did the S&P. Now, this portfolio is more volatile than the S&P 500, but over time it returns. Well, over the past 5 years, it's returned 4 times more, 400% more than the S&P 500. So you've got to expect that it will be more volatile than the S&P 500, but it has more movement to the upside. And when we look at the NASDAQ 100, it is down from last week, down about 2.4%, or percentage points from last week. It is still almost double the S&P 500, almost double the QQQs, which is the index that these dozen stocks come from. So we're doing pretty well with this portfolio. And again, this portfolio has outperformed the S&P 500 by over 400% over the past 5 years. Folks, on average, that's about 80% a year more than the S&P 500 when you take the compounded returns over the past 5 years. So yeah, this is my favorite portfolio personally, and I like it, and we sell some covered calls on it, and we also do some spreads, and we do use the SQQQs in order to hedge this portfolio, and we're about 3.2% ahead on that for the year. Problem is that when you invest in a inverse ETF, let's say we use 10% of the portfolio, which we do at times, then you only have 90% in this portfolio. But if you can gain a few extra points using spreads, then you can put 100% in here and use your spreads, and with the spreads you can pay for disaster insurance and you can pay for money management, so you don't even have to worry about the spreads. When the spreads go on, they go on all the portfolios all at once, and you all come out at this, everybody gets the same price, and it's been working very, very nice for us. So yeah, we're able to pay management fees, and we're also able to use those puts that we talk about in our Saturday market recap for disaster insurance, and that's what we're using for these portfolios. So folks, we had a rough week heading into the election, and next week is going to be a rough week also. The market's going to go up, the market's going to go down, drive us all crazy, and the best thing to do is not to pay too much attention to it, because it will be an event-driven market, and then the market will get back to normal probably toward the end of the week, and that'll be that. We'll go on our merry way. So remember, just if you want to live on this beach like Jimmy Buffett once did, then you've got to learn how to invest even better than Warren Buffett does now. And remember, Buffett says that he cannot beat the S&P 500 any longer, and we are beating the S&P 500 by over 50% this year so far. So we're doing well. Go out, folks. Have a safe weekend. Have Sunday dinner with your family. Stay well, stay safe, and we'll see you back here in a couple of days.